Hey guys, Manjit Rukhra here from the Raise Private Funds course. I wanted to shoot this quick video and tell you guys, explain a few different strategies that I use and wanted to show you how I buy real estate with no money down. Now, it doesn't matter when you're in the business, either if you're flipping properties or your niche is building homes or even buying income generating properties. There are different strategies that you can employ in your business. And in today's video, I'm going to be sharing those and how you can start buying real estate with no money down. Now, when I started investing about 12 years ago, I learned from one of my mentors after I actually got tapped out of using my own funds and going to the bank and saving 20% down. I stopped scaling and I really seeked out the right mentorship and education. And I stumbled upon a guy that took me under his wing at that time. And I started learning different strategies and techniques that he was using. Now, at that time, I was learning a bit more about rehabbing homes and flipping properties in my local market. And after sitting with him and spending time with him and really seeing what he was doing in his own business, I started figuring out that there were a lot of people out there in my network. So family, friends, people that I worked with at the time when I had a job, that were dissatisfied with some of the returns they were getting at the bank, some of the other returns they were getting in different financial institutions, whether if it was in their government registered funds like an RRSP, or even sitting in a bank account, or even sitting in their house, like equity that was sitting in their house that they were getting no return on. So I started approaching these people and started sharing with them a little bit about some of the deals that I was finding. And that's the beautiful thing when you're in real estate and you're a professional real estate investor, you add value to somebody by buying discounted properties, looking and locating properties, negotiating properties for yourself that are selling for 40 to 60 cents on the dollar. And that's what I really started getting good at. So when I started bringing these deals to people in my network, essentially on a silver platter, it became easier for people to actually see the value that I brought to them and to loan me their money. And when I started using that money, essentially that initial money I started using and buying real estate with 100% cash, so buying it, fixing it, and then selling it for a profit, I was able to buy these properties up to 100% cash. And then I would also borrow the money for the holding costs and the renovation costs. So these costs are like either, again, renovations. If my renovation budget was $50,000, I also had to pay land transfer tax. I also had to pay the utilities, the property tax, the house insurance. I would borrow 100% of all that capital, and I would structure my loan so I would pay only 8 to 10% per annum on that money. So after fixing the house, say it took me 3 to 6 months, which was the average, it took me to buy it, fix it, and then sell it to a homeowner, well, I would only pay for the amount of months that I actually borrowed the money. I would not pay 8 to 10%, say on $200,000 for the full year, but only on the time that it took me to renovate the house and sell it. And that's the beauty. And essentially when I started doing that, my business exploded. And then only about 3-4 years ago, I started to think and I wanted to get more into the long-term game and started wanting to create more of a passive income for my family and I. So I essentially went back to this money that I had raised, and I had raised almost over $5 million at this time. And when we were doing about 8 or 9 flips a year, I started going back to these investors and saying, hey, you know what? This is great that we've been making short-term profits, but what do you say about turning some of this money and let's start looking at buying long-term rental properties? And essentially, it was really a shift in their brain, really just educating your lender and turning them into a joint venture partner. So what I started doing is started looking for income generating properties that made a positive cash flow at the end of the month. And I asked my joint venture partners, or my lenders that I converted to joint venture partners, to put the down payment at the bank. So putting up the 20% down, putting up any renovation costs if the rental property needed any rentals or it needed any money renovation at that time, and essentially switching that lender money, that short-term 8 to 10% lender money, and then I used it for them to put the down payment and go on title. And why they did this is because, again, I had become very skilled at buying discounted properties. So the same way that I buy renovation homes, flip homes that I would flip, is the same way I would find rental properties. So essentially, buying the deal, locating it, managing it, leasing it, finding tenants. This is the value that I started bringing to these joint venture partners. And essentially, even though they didn't buy or they didn't put up 100% of the cash for a rental, and most lenders or most joint venture partners won't, they put up the 20% down. So initially, I ended up still buying those rental properties with none of my own money, where the joint venture partner put 20% up and the bank loaned the 80% up, and where I structured a joint venture agreement and a bare trust agreement, which I'm going to be explaining on further videos that I'm going to be showing, where I legally own 50% of that home. And once this bare trust agreement was signed, I registered this agreement as a lien on title. And that is how I've been able to buy either flips that I did or even long-term properties, rental properties with none of my own cash. Now, I'm going to be making further videos and I'm going to break down this process for you guys. But I want to let you know that if you're in the business, just like me when I started, and you're finding yourself, you're getting tapped out of your own resources, and you find it really hard to save up 20% down and then go buy a property, which like 99% of investors out there do, you need to start learning about different ways of working with lenders in your local market, finding people that are dissatisfied, getting garbage returns at the banks, at financial institutions, and look at how you can add value to them and they can loan that money to you and really put it into a tangible asset, something that you can go and touch and you can see where your money is, and that's how your business is going to explode. So whether you're flipping, whether your niche is buying rental properties, well, this is where you can scale your business up, and learning how to work with joint venture partners or lenders, whether you're building, you're flipping, or you're buying rentals. So again, guys, if you like this video and you want to see more videos like this, comment, leave a comment below. I'd love to hear your feedback, and also, subscribe to my channel for more videos about real estate investing, raising capital, and how to really scale your business. Thank you.